Well, happy Monday, October 2nd. We have made it to October, one of my favorite months of the year. The weather's getting better here in Austin. UT is undefeated and playing Oklahoma this week. And most importantly, the fall real estate market is kind of picking up activity. And we're seeing more buyer seller activity right now as people try to purchase properties before the end of the year, despite some of the data I'm about to share with you. So let's take a look at some of the national and local trends taking place in real estate right now as we enter October. We got to start again with interest rates. Last week was nasty. So rates rocketed up in the middle of last week. They got up to about 7.65. At the very end of the week, they kind of softened a little bit. So right now we're sitting just under 7.5 on the 30-year fixed rate. Want to show you this chart, which is going to show you the last several months. So basically, again, you've seen this from me many weeks. Basically, the last time we were below 7 was back in July, and we've been up and down in the sevens. We hit almost 7.5 in late August, went down, but really since late August, boy, has it been a steady climb, just 7.25, and then it rocketed up last week. We hit 7.65. So basically what the overarching story is the investors in the bond market and the mortgage-backed securities market, they're starting to believe that the Fed is going to keep rates higher for longer. Even if the Fed hasn't done anything in 3 months in terms of raising rates, they're starting to want more yield and realize, hey, this is going to stick around longer than we thought. And that's really putting a lot of upward pressure on the yield, on the rates that we have to pay. I like showing interest rates all the time because buyers are acutely aware of rates. They're talking to their lender all the time. They're running the numbers, but sellers really aren't. Sellers, if you're not out there buying, you're just waiting to get an offer and to see what buyers want to offer. And so sellers aren't always understanding the pressures on buyers. I'm going to show you some stats here in a minute to show you why buyers are struggling to make offers in the market. But right now, mortgage rates are climbing. We're going to watch this. But there's starting to be a case to be made that we're going to start seeing rates at least at or above 7.5, maybe for a bit to come. We'll see. Every time it gets up to 7.5, kind of works its way back down. But we'll see if it sticks or goes higher than 7.5. So that's the interest rate. Let's switch over to some national data. This is coming all from Redfin's research department. They do a good job with charts. So this is national through about mid-September, these charts. So this is nationally the median sales price. Obviously, it's up from the spring. You can see every year there's kind of a bell curve. These last three are really pandemic lines, and so it's going to throw a lot of things off. But what we're seeing is kind of nationally, the market peaked around July, which is pretty typical. And we're just seeing the price just slowly stagger its way down a little bit. Very common to see that in the fall. The median asking price, this is list price, is up. And for some reason, maybe we're running out of inventory in a few markets. We saw that spike up a little bit. Not major, but something to take note of. Housing payments. Here's what I was just talking about. So if you go back to 2020, at this time, between September and October, mid-September, the average buyer was paying a little under $1,500 a month for their mortgage payment on a median U.S. house. Now that number is almost $2,700. So it's about $1,150 more every month. So I don't know who you are or how much you make. It doesn't matter. If you're paying over $1,100 more a month, it's much harder to get approved for a certain house that you want. And of course, rates are going up. Literally, it feels like all the time. It's very hard to kind of lock in your rate. And so what's happening is it makes it hard for buyers to write offers because they want to shop for the best type of property they can get. And if rates go up one week, it means they have to come in at a lower price to get the same house. And so a lot of this is baked into the pressure of what buyers are writing in their offers right now is these high mortgage payments. Pending sales, again, compared to the pandemic, pending sales are down 13% year over year. So fewer contracts are being written. New listings from sellers are also coming down. You can see last year, wow, what a collapse with the red line. This year's been a little more steady, a little more seasonal, but we're seeing as we're entering the fall market, fewer listings. Active listings for sale is down 16% year over year. And again, it's been pretty flat. Basically, not a lot of sellers listing this year. 3.1 months of supply nationally, spiking up a little bit. I think some of that is interest rates. But supply, you could see it grow from the lows at the beginning of last year, climb to last fall. We'll see what this fall looks like. Okay, how many of these listings went under contract within 2 weeks? So pretty quickly, that always kind of peaks in the spring. This is April, May, June. Looks like April and May generally is where you see homes sell the fastest. And then, of course, you get to the summer and it starts to trickle down. And we're seeing that again this year. Even in the pandemic, the blue lines, you can see that's coming down. Homes sold in a median of 30 days. That kind of flattened out this year, and it's starting to spike up a little bit in the fall. It means it just takes a little longer to sell. How many homes sold above the final list price? What's the final list price? So if you list a house at $500,000, you drop the price to $470,000, and you sell it at $470,000, you sold it at full list price at your final list price. So how many sold above that number? That's dropping. We're down to about 32%, which means 2/3 of buyers are still getting a home at or below the final list price right now. 6.4% of national listings had price drops. In Austin, that number is way higher. But typically, we're seeing price drops climb as inventory builds up. And then here's that final list price again. How many homes sold? They're selling about nationally 99.5% of final list price. I'm going to show you some local data to match that here in a second. But again, you can see these were really spiking in the pandemic, and now it's coming back to kind of a normal number. All right, let's go to some local data. Let's talk about that sale to list price ratio. So now we're looking at Austin in real time. Okay, so this is looking back to 2018 all the way through now. What is this little cardiovascular chart here? So this is the sale price to the list price ratio. In other words, where are buyers closing compared to the list price? So pre-pandemic, here's the pandemic started right here. Okay, pre-pandemic, typically an average home would sell a little bit below list price. Here's 99.5%, which we just saw on that chart. And some of them would dip below, usually in the winter, and they might spike up in the spring. So this is pretty typical of what we would see in a normal year. That was 2019. Look what happened once we got to the pandemic. We got to about March, and from March 2020 through about March, April 2022, on average, every home was selling at or above the list price. And so you can see how crazy it was in 2021. The average home at the peak was selling 7% above the list price, and that was just a median home. I was involved in many deals that were 10, 20, 30% over the list price. So it was insane, but we had nothing for sale. And so you had this crazy activity here. And look what's happened since we had the interest rates go up around midsummer last year. Well, then you had a huge drop the second half of last year, and they kind of bottomed out with the median home selling 3% below the final list price. Now we get to this year, and here we are. We're back to kind of a normal blip, very much like this. We're just seeing kind of, maybe 1 or 2% off final list price. So it's been a lot more steady, and we're seeing that here in the numbers. Here is the historic sales price trend. Again, going back to 2019, you can see kind of a nice gradual climb. Here's 2020, which was almost a straight line up as we started to run out of inventory. And of course, the activity was kind of in the back half of the year after we got kind of used to the mask mandates and all that. Everybody started rushing out to buy properties the second half of 2020. And then look at the price. Bam, up in 2021, and bam, up at the beginning of 2022. Just skyrocketed up in price. We peaked out last summer, and then we had a really hard fall down to, maybe January, February this year. Now we're back to kind of a normal little market. And so you can see not as much of a camel hump here, kind of much more normal. We're sitting here right now about 450,000. But is it going to go back to these numbers? No. We bottomed out 322 in February 2020 and 300 back in March 2019. We're at 450, and we're still up from, March was 441, February was 429. So we're still up about 20,000 from February of this year. I predict maybe we'll give that back, but I expect this little bell curve right here is going to be much more muted and fairly flat for 2023. This is number of active versus sold listings. And this is really telling me kind of where inventory is going and how much pace of sales we're having in the market. So the green obviously is the active, and we typically see it fall through the winter, and then it picks up in the spring, and then it falls in the fall. We're kind of hanging in there. They're not really moving that much. I mean, if I go back to June, we had 11,046 homes for sale. And we're sitting here in October and we have 10,940. We've only moved the needle about 100 homes. And so basically, we're kind of sitting at the same level of inventory we have for the past 4 or 5 months. Blue is sales. How many got under contract and closed per month? We peaked out in May. That was about 3,400, almost 3,500 homes. Now, we haven't closed all of September out yet, but right now we have only sold 2,100 single family homes. That is a tiny amount of homes this time of year. And you can see that in general, it's trended downward. I would say that's pretty anemic. I'm hoping, and I kind of feel based on activity, that we might see that bounce up a little bit as we get into October and November, but still very low number of sales. And that's what's keeping the inventory kind of stubbornly up. As we don't have enough buyer activity, as these rates keep going up, the buyers are coming out of the market, and it's just keeping inventory high. So that's something we need to watch, especially if you are a seller, is your competition is still sitting out there with you, waiting for a property to sell. All right, finally, I want to start with or leave with some decent news. So the Austin market, Dallas, San Antonio, Houston, all of them had big run-ups during the pandemic. But, this latest study is looking at, well, where are homes still affordable? Where can first-time home buyers go to still buy an affordable house? Well, Texas still has a lot of those markets. And so this article is a good one. If you want to go to Smart Asset, click on Smart Reads and look for this headline: Best Housing Markets for First-Time Home Buyers. But here's the little chart down here. Number 1, Killeen, which is in Bell County, north of us. They've gone up about 7.5%. Their median home price is still $252,000. Remember, we are sitting at $450 in the Austin metro area. They're at $250 and they're 1 hour away. Wichita Falls, which is northwest of the Dallas-Fort Worth area. McAllen is in the valley. They're only $210. But basically, all of these have gone up 6 to 7%. Waco, which is halfway between here and Dallas and where I grew up. Waco, median home price about $262,000, and again have gone up about 7.4%. And Brownsville, down in the valley, median home price about $236,000, up about 6.6%. So Texas still has 5 or 6 of these most affordable markets that buyers can go find affordable housing. And they are within striking distance of some of the major metros, just depending on what you want and where you want to live. If you're an investor, these also might be some markets to check out right now with the high interest rates. Anyways, I hope this was helpful. It's a lot to go over. Obviously, as we enter October, mortgage rates continue to drive the story. They are going up. We are going to see this week if they start to flatten out or they soften back down. But those are the real driving factors in the market right now, and stubbornly high inventory. So this is a really important month, especially for sellers. We want to get those properties sold this month while we do have good fall activity. I do believe it's going to start slowing down as we get into the winter months. If you are a buyer, just know, based on those charts, it's really hard to lowball sellers because most properties are still going to sell with, once they get to the right price, they're going to sell within a more narrow gap, list to sold price. So I know that's confusing, but sellers are watching comps. They're watching what's selling in the neighborhood. They're willing to adjust their price some to get it sold, but it's not necessarily, I'm not really seeing anybody like give their home away. Nobody's distressed. They're just disappointed. I hope this was helpful. You can follow all of our videos on YouTube. Check out at Ryan Kelly Group on YouTube. You can check all the videos out there. And of course, if you're planning to buy, sell, or invest anytime in the fourth quarter this year, we'd love the opportunity to talk with you. Until then, hook 'em, and OU still sucks.